Hello and welcome to this November 8th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're taking a look at the equity-only put-call ratio. I want to show you how you can use this a little bit in terms of identifying sentiment that many times will mark short-term tops and bottoms in the market. We actually have an event that's coming up on November 16th. It's Tuesday, November 16th. Normally we start around 4:30 p.m. Eastern Standard Time, and that lasts probably about an hour or so. We have a question and answer session afterwards. But in this session, we're going to go over all of the ins and outs of this equity-only put-call ratio, why we use it, why it works, and show you some correlations between the readings that we've seen on this relative ratio and compare that to various tops and bottoms in the market. I think you'll find it pretty compelling. If you're interested in that event, you can simply just go to our website at investedcentral.com. That's INVESTED central.com, and we'll have some information up on our home page providing some further details on the upcoming event. But taking a look at the chart, essentially what this is, down at the bottom, this is the data that's used, that we use the oscillator, the price oscillator here, in order to calculate relative pessimism or relative complacency that's building in the market. But the equity-only put-call ratio, every day's reading is down here at the bottom. A low reading means that the market is complacent. A lot of folks are buying equity calls as opposed to the puts, and what that does is it just sends you a signal that the market's getting too optimistic. And normally when that happens over a period of time, you can get to a market top. That's what happened back in April 2010. It's one of the main reasons why we turned very bearish back in April, thought we were at or very near a top, and as it turned out, that top was a several-month, multi-month high. So certainly it worked back in April, and it's worked many times in the past. But taking a look above the equity-only put-call ratio, which is at the bottom, this is our price oscillator that we use, and essentially what we're looking at here is when does the relative pessimism or when does the relative complacency reach an extreme level. Now, without going into a whole lot of details, we're going to talk about this a lot more on November the 16th, which I think is going to be very interesting, very timely, and very critical from a trading perspective. But for purposes of this chart of the day, just know that when you hit the green line down here, down around -20, that tends to be a buy signal, that things are just getting a little bit too pessimistic in the near term. And the red line up here is when things start to get too complacent, and many times that will signal that the market is at or nearing a top. Now these potential tops that we point out here, notice the red arrows that come in, and you'll see that many of them correspond to a short-term top. In some cases it's longer term, but you really have to look at other indicators to determine the length of time. When this reaches an extreme one way or the other, it doesn't mean that we've hit, for instance, a long-term top or a long-term bottom, and therefore you can't trade in that direction for the next 6 months, anything like that. That's not what we're trying to say. This indicator should be used for short-term purposes only. However, the one when we reached the high back in April of 2010, it did last for a while, but that extreme complacency reading coincided with a long-term negative divergence on the weekly charts, which many times does signal longer-term weakness. So you do have to kind of combine it with other indicators. But again, go to our website at investedcentral.com. I think you'll find the upcoming session to be extremely valuable in your trading. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.